What is up, guys? It's me, I'm back again. In this video, what I'll be doing with you guys is please do not mind the echo. But what I'll be doing in this video, I'll be giving you my strategy. Actually, not my strategy, but like what I use, the strategy that I use for the past few years to be able to read the charts. I've said it in the last video that everything on YouTube is a duplicate. Duplicate meaning what you are learning, someone has already taught it. It depends on the person that you are learning from or the channel that you are learning from. Support and resistance. Looking at the history of it, it has been long there. It depends on the person who's teaching it, so you can grasp it, implement it, and see whether it works out for you or not. This strategy, I learned it from, I don't like to mention names, but certain people from South Africa, great traders from South Africa, and then found out that it worked for me, and I was able to catch big moves using this strategy. Like I've posted from my shorts. You can also go into my Telegram to see the work that I've been implementing and the type of interest that I've been getting with the strategy. So with this strategy, you're going to mark your current high, then your current low, right? From there, you will be looking at the areas where support and resistance has been occurring. Let me turn off this. You'll be looking at areas whereby if the market tapped and then reversed, it is already a zone for you. So looking here, we've got two touches. I'm saying two touches because if you can switch back to the candles, there might be a wick right here. So it's two touches. So I will be marking my zones currently, which are my support and resistance levels. So that's what I am doing currently. I've done it. Sharp. Looking here, you might be like, okay, Madiba, there's no zones right here. Why is that so? There are currently no zones because we are on the weekly time frame. So the pair Nasdaq has been showing us that for the past, let me see, 1, 2, 3, 4, 5 weeks, close to a month and 1 week, it has been buying massively. So that's the data I've got from Nasdaq. Now I'll switch to the daily time frame. Coming to the daily, okay, we can see that something has been occurring right here. There was something that was happening right here. Sharp. I do it once again. Go to my line chart, then see that, price has been giving some bullish sentiment. Why do I say bullish sentiment? Like I predefined it in the last video. We've got a high, we've got a low. We've got a high, we've got a low. We've got another high, we've got another low. And then we've got a high. It doesn't make sense because we are on a higher time frame, which is the daily time frame. So with that being said, I will mark these zones right here. This is what I will do. And then once again, look left, look here. This data doesn't necessarily, well, it is necessary to market, but there are also a few adjustments that you need to make on your strategy. On your strategy, what I mean is that you can mark your support and resistance levels on the weekly, switching to the daily. You've never marked the zone properly. That's what I mean to say. So from daily, that's when I will look. Okay, price has been bullish. Where can I draw my trend line? Another thing. Okay, price has been bullish. What makes me say so? This is what price has been doing for the past few days, months, or yeah. See, price has been creating a low, then another high, another low, another high, another low, equal high, we've dropped, equal higher low, and then another high. So basically the sentiment on this thing, it is bullish. That's it. Nasdaq is bullish. So despite the Iran and US war currently occurring and making chaos, like this war is creating a lot of chaos in the industry, and it's very unlikely to be catching good moves from the market. What will you be doing? I will be taking my trend line and looking for two or more touches. So this is what I see currently. From here to there, that's two or more touches. And with that being said, it can be accurate, but switching on the line chart to the candlesticks chart, you can see that it might be the body of a candlestick. It all depends on a person whether you prefer to be trading from the body or the wicks of the candlesticks. So I will be taking it from the wicks, which is there, and you see, excuse me, that's how I know that yes, we are bullish, and I am correct with the trend line that I took, which is on the higher time frame. So one may ask, why did you clone this to that? Like from your diagonal support, you clone it to your diagonal resistance. That's what I prefer to do, guys. It's all about preference. At the end of the day, the chart is all about you. It's you versus you. So I don't like to confuse myself and okay, I've got this trend line and then I have to do something like this. Something like this. It utterly doesn't make sense. If I were to remove this right here, let me do this. Like, does it make sense, guys? Like, literally, does it make sense? We all won't see the same thing in the market, but for me, this is messy for my chart. I prefer to keep it simple as always. So, with that being said, I will be switching to the 4-hour time frame. On the 4-hour time frame, yes, I know the sentiment is bullish, but now I need to know the structure of the market. This data right here, for now, if price doesn't go short enough, it is all unnecessary right here. Now it is unnecessary for you to be looking there so you can get the data for here. No, doesn't work like that. So the best things to do is to focus on the current data, whereby if you can remember, it was the weekly time frame where we had a candlestick with the gaps, and then on switching on the daily, that's when we saw at least a bit of light of what's currently happening. So I will be marking my structure, which is a higher high, higher low, higher high, higher low, high and equal higher low, then another high, higher low, testing the previous structure, then another high. So yes, we are in a bullish sentiment. What I'll be doing, looking for a pattern. Some people say patterns don't work, but they do work for me. Like, I don't know how simply I can explain this. Trading is simple. The hardest part is mastering yourself and your psychology. I won't lie, guys. When I mean that, trust me, 4 years in the game, technicals I'm good, and mastering, mastering myself has been a journey till this day. It is now that I can say or attest to the fact that I am no longer part of the 90-90 rule. What do I mean by that? Sorry. The 90-90 rule is that, let me type it out actually. The 90, no, 90, 90, 90 rule. We make that a big bolder so some of y'all can see it properly. So what is the 90-90 rule? The 90-90 rule is that it's statistics which are proven that 90% of traders lose 90% of their capital within the first 90 days of trading. These are proven statistics and facts that 90% of traders lose 90% of their capital within the first 90 days. So, you make your first initial deposit, let me make it fixed, on the 2nd of January 2029, you make your first funding, whereby you fund that $100. You fund that $100, and within those days, that time period of 90 days, we as traders feel like when you are not trading, you are slowing down your progress. But the actual fact is that doing nothing is the best thing to do in this market. You know, some people, for them to blow their account, it is mainly because they force. Traders tend to force things that they do not see on the market. Meaning, you don't see anything, but you force yourself to take a trade so you can at least try to feel good that I am doing something. And that thought process, unfortunately, it is a poison to your journey. You know, it is recently what I mean is that it is currently April now, and I have passed this rule that 90% of traders lose 90% of their capital within the first 90 days. So how did I surpass or break through from these statistics? It is simple, guys. Never force what you do not see in the market. You can have multiple pairs, analyze and do whatnot. But if you see nothing, structure is not talking to you, confluences are not aligning, the best thing to do is to step away. That's it. It's better to preserve your capital than lose your capital. It has been this simple. Yes, I can say it is simple, but there are those days whereby, or weeks currently, 2 weeks currently, I've never took a trade. Price is not talking to me, so the best thing is to step away. There are those days or weeks whereby you do nothing and you feel like maybe you're slowing down or maybe you're doing nothing, and as a matter of fact, you are on the right path. You are on the right path, trust me. So, mastering yourself is the hardest part. I don't wanna lie. You've got your trading psychology in it, you've got your, it's a lot of barriers. You've got your journaling. It's a lot, guys. Technicals are nothing. Trust me. Drawing a support and resistance line, diagonal support and resistance, this is all nothing. I kid you not. The next video I'll be tapping into your trading psychology. This is all nothing. You can take someone and teach them how to mark these zones. Within the first 2 weeks or a month, they can grasp this. You can easily say, whenever price, take it as a snake. Whenever price, no man, what am I doing? Whenever price curves, it is a zone. Simple. No man, what am I doing? What's that like? From here, price curved, 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 price. Clearly, you can see that you can describe it as a snake. That whenever price tries to curve, it's a zone. Let's say this is the head of your snake, like this. It's a snake. Blah. Okay, we've got that price curve there. Let me change the color to black now. Price curved there, and then price curved once again there. It curved here, it curved there, it curved, so on and so forth. Already you can tell that person that this is a high, this is a low, a high, low. Just like that. It is simple, guys. Within my first year, year and a half or two, I was mainly focusing on my technicals. Me and I told myself that, well, I gave myself an illusion that once I master my technicals, lol, like look guys, I'm gone. I will be having a Lambo in a year or so. You know. So next video I'll be tapping into the trading psychology and the aspects that you need to master this thing right here. It is a fact, and I kid you not. Do not look down on this. Like literally, do not look down on this. Back to the video. So with this pattern here, I can already see that we are bullish, and I have a pattern right here. You know. So now I'll be marking my areas of interest, which is a high, a low, a high, and then nothing. So current price is currently, actually, sorry guys, the Nasdaq has printed a new high of 27,781.05, which is a new high, meaning we broke above the 27,700,000 USD. Bad. So what do I do now? I mark my current high from the structural point. Try by all means to make sure that your high is low. Not low. What am I saying? Your high. Try by all means to make sure that it is accurate. And then mark my low right here. That is my low right here. Let me do it again. So why did I mark this? Looking left. Another key part, always look left for you to get your statistics accurate. Please look left, guys. So we've got, okay, a high, a low, then another high, which was what, our current high on the structural point. We got a low, and then we broke past the previous high, which is this one right here. We broke past it. Then my intention, since all the market is bullish, I will be looking for price to come back here, retest, give me certain confluences. When I mean certain confluences, what I mean is that, okay, price is high, first confluence is bullish, first confluence, second confluence, structural wise, we came to retest the previous high, meaning turning support into resistance. Resistance now into support, and then my third confluence can be candlestick confirmation. Okay, wait for a certain candlestick confirmation, a bullish pattern, something that has got to do with your bullish candlesticks, and then ride it. Take my entry right there, then go high with the price. Another thing that people get wrong is that, yes, price can be bullish, but you might be waiting for yourself for price to get here, retest, give you all the confluences, maybe not give you the confirmation part, and then you thinking that price might be going higher to create another high and whatnot, but price does this, breaks below, retest, already it's a structural shift, and then go down. By that, you might be getting a fake out right here, thinking that yes, we are going to be bullish, price is going to be buying and whatnot, but unfortunately you are caught on the wrong side. And with this structural shift, you might be seeing that price created the left shoulder, the head, and then the right shoulder, and then we are bearish. Unfortunately, it's a sad thing to witness, but it is the market, it is what it is. You learn from your mistakes. That's the only way to learn. For you to learn, you need to get bent, if I mean to say it. So yes, I've got my zones right here. What else now? I will switch to my 1 hour time frame. Switching to my 1 hour time frame already, I am expecting price to come back here, retest, and then go high. But another thing that price can do is that price can easily play around here, give me an equal high, then higher low, higher. Equal high, and then a lower low, lower high, lower low, lower high, break below, retest, and then we are gone, unfortunately. So you have to look at it in both ways. If price was to buy, I'm looking for this certain setup. If price was to sell, I'm looking for this specific setup. So coming to my 1 hour time frame, I will be looking for an area that I can say that this is my minor level area, which in this instance I can see, well, I can't see anything, to be honest, guys. I don't see anything. Let me take this right here. Look at no. These zones are wrong. But I don't have a minor area currently. Like, even looking left the data, I don't have previous data right here. It's only a touch, and me adjusting this to here, the body of the candlestick, still doesn't make sense. Adjust it to there, still doesn't make sense. And adjust it to that, still it doesn't make sense. So my buyers, if I were to be looking for a trade on this pair right here, either for me already I know that if price does there come here, then I'm looking to be going long. But on the flip side, if price changes its sentiment from bullish to bearish, I might be looking for price to give me a pattern right here, give me some sort of a pattern, or since while we are like this, okay, on the 4-hour time frame I see nothing, but on the 1-hour time frame I might be looking for something like this, price to play along, come here, which is a high, play along, then give me an equal high, then already it's an M pattern or double top pattern formation, come back there, retest that right here, meaning already it is telling me that we are bearish now. So I have to be monitoring my 4-hour time frame to really see that indeed we are shifting our sentiment. So going down to the 15-minute, I will be looking like already you can see price has been failing to break past the strong level of resistance right here for the 1, 2, 3, 4 for the 4th time. So it already tells me that this is a strong zone. Others can be marking the zone right here that okay, we've got certain wicks, break below, I am going short with the Nasdaq. But on the 15-minute time frame, I kid you not, the best thing that you can do is look for your entry only. Other aspects, just leave them behind. So if price was to shift structure, I'll be waiting for it to come here, then confirm, which is double top, confirmation candlestick, and then a shift in structure. That confluence, that's what I'll be speculating for price, and then come there, so on and so forth. There's no need for you to be buying these YouTube courses and spending crazy amounts of money. Man, we have AI these days. We have certain channels, and the best thing that you can do if you are learning from YouTube, take it from me, is that find maybe 3 people. When you find these 3 people, find the person that you will listen for your learning curve, meaning your candlesticks, structural things, whatnot and so forth, like you're learning the basics from that person. The second person, you try to learn the fundamentals, try to know information about the fundamentals, how they get to know fundamentals and whatnot. The third person, he or she must be teaching you a strategy, and you must resonate with the strategy. If you do not resonate with the strategy, find someone that will resonate with you. You have to put in the hours. So you putting in the hours will result to you understanding your craft. And once you understand your craft, you will be making certain shifts, meaning small shifts for you to be able to master your craft. It is a you versus you game. Nobody's coming to save you in this thing. And I am deep down into this rabbit hole whereby giving up was the last thing in my mind. I have to make it out by winning. So you just have to make sure that this craft, you master it, guys. So today I'll be analyzing 2 or 3 pairs. I'll see. But it is the thing that I am giving you the strategy and what I've been using and took from other traders to be able to predict the markets accurately in a way. I'm a retail trader, but my forecasts to an extent they do work. Currently, my strategy is in a losing streak, and I see nothing that I'm doing in the markets. And I won't blame, well, the war has a hand to it, but I always say that everything is my fault. You know, I don't like to blame people or, yeah, Mr. Let me not mention names, but Mr. Trump as making a chaos in the markets, blah 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 blah. Nah, I always look for light inside the dark. You know, whenever something bad happens, always try to look for the light. So what I told myself is that this is putting in more experience for me to learn and become the best trader that I could be tomorrow. You know, so coming back to the strategy, I already presentation 1 and 2. I already taught support and resistance, structural things, how to see your structure 1, 2, 3. So I will be marking my structure and then giving you the basis of what is happening currently. So I've got my current high right there. Whoa, I hope you saw something right there. That's my wick. And then switching to the line chart from the high, marking my high, I took the wick, and then switching to the line chart. This is the body of the candlestick. See, so I will be taking this body and I will explain why. So that's what I did. So I will now switch. I did mark my current high and low, switch to the daily time frame to mark or weekly so that I can make a few adjustments on the daily. So that's what I did right there. And then 2 or more touches. It is a zone for me there. No man, what's happening? 2 or more touches, zone. 2 or more touches, it's a zone. Tricky part. I don't have 2 or more touches, so let me switch to the daily for a clearer picture. Already, daily is showing me a clearer picture. Okay, 2 or more touches, right there. 2 or more touches, looking left from here, there, no, then there's the data right here. It is not necessary for you. It is necessary for you to do, but you don't need that. Your main focus should be here. So what I'll be doing now, where I have to give my most attention to, I'll be looking for 2 or more touches, which is then Y 1, 2, 3, 4 touches. So already that zone has a big significance. No. So come to my candlesticks chart. I will also be looking for what price is doing. Are we bullish? Are we bearish? So trend line, take it from red to there, 2 touches, clone it, and bam. Let me make a few adjustments here and there. So the reason why I took the body of the candlestick on the higher time frame, the best thing that you can do on a higher time frame is that this is your all-time high right here, meaning this is the body of the weekly candlestick, this is the wake of the weekly candlestick. So to for me not to be confused and to show myself that this is an all-time high, I will be extending my resistance zone from the left to the right. Then from that, diagonal support or resistance being made, I'll make a few adjustments from here to the perfect, then here to the perfect. Then structural wise, what am I seeing? Go to the 4-hour time frame. Then let's see. Keep looking left. The zone here had a huge significance. The zone right here had made a huge significance, so I need to be wary of the zone. Wary meaning careful of the zone right here. So let me delete the left and right thing. And pull it to the left. Because we are playing somewhere along those lines. So already I know that looking past, there was a zone that had made significant moves previously. So structural wise, let's see. We've got a higher high, higher low, higher high, higher low, higher high, higher low, fake up, higher low. Lower high, lower low. And one thing I'm now witnessing is that right here, price, it was choppy, meaning clearly we did not have any trend direction or whatnot. Just right here, we had no direction or we didn't know whether we are going north, south, east, west. We didn't know. So clearly the market was choppy right there. But in this regard, and also based on experience, for me to get an opportunity, okay, I would have saw that here price was choppy. Then we eventually broke down and then pushed to the upside. In that regard, I would wait for price to come here, retest that previous resistance that had made significant moves and then come back down with it. But let me try and look at structure. This is what I've been saying, that the past 2 weeks I saw nothing. So okay, high, higher low, lower high, lower low, lower high, lower low, higher high. Okay, and then confusing part now. But if price were to come here, I'll try it to there and there. No. But in most instances, if I see nothing, the best thing to do is to step away. That's the best thing that you can do for yourself and your capital. And thing is that I can see a pattern right here. No. I can see a pattern. Why? Because we've got 2 plus touches right over here. Do that. No. No. Worst case scenario, I'll be stepping back from this thing. No. I wouldn't take or be part of this trade. But it all depends. But if price was to come here, give me a proper confirmation to go short, retest that strong resistance that has recently turned into resistance because it was support, now turned into resistance, and then I would go with this trade. Maybe it's a 1 to 2, 1 to 3, I don't know. Let's see. Let's see. No. My stop loss in this regard would have to be open. So, a 2 to 1 rest to reward would do for me, because for me to also take my take profit here, look here, we've got first touch, second touch, and possibly a third touch can emerge right here. So if you know the trend line rules, the third touch always has the highest probability. So that's what I'll be doing. But rest assured, I wouldn't be taking part in the trade right here or looking at this. Then coming to the German 30 or the DAX or the German 40, this is a bonus for you guys to understand. Mark your current high, then mark your current low using the line chart. Using the line chart, which is your current high, current low, no, current low, back. Then 2 or more touches, you take those zones, mark them, I see nothing from now, then switch to the daily. It is simple, guys. Technicals are nothing. Technicals are easy. It's the easiest part. Waiting is the hardest part. Trading psychology, risk management. I kid you not. That video has to be in detail. 2 or more touches, which is 1, 2, 3. Okay. And then we'll try to look whether German 30 is bullish or what. So in this instance, I'll be doing this. Low and do that. Come to my 4-hour time frame to look at the structure. Looking left, okay. The zone is strong right here. Might be support, might be resistance, but we will find out what it has been. So do that. Let's see. Let's see. High, high, low, higher, high, higher, low, another high, higher, low, lower, high, lower, low, lower, high, lower, low, equal lower, high, lower, low, another equal lower, high for the third time. So depends also on the volume that you are seeing in the market. So on this instance, I also wouldn't be taking this trade because look at the momentum approaching the zone. You know, big candlesticks are approaching the zone, telling me that buyers are looking to support the zone, to surpass the zone. You know, so I wouldn't take this trade. Still, it doesn't resonate like with me and my strategy. So that's right here would be a no for me. So yeah, just like that, guys. For me to wrap it up, I just gave you my strategy, and in the future, whenever you see me posting the lifestyle, the end results of trading, or the other side, the good side of trading, just know that I tried by all means to give you what works for me, while I'm still currently down or haven't seen the light in trading. So tomorrow, when I mean tomorrow, next few months, years, I don't know, only God knows. Whenever you start seeing the results of trading, please by all means get back to such videos and try and grasp whatever you can grasp. I'm not saying listen to me, I'm the best in the game. Yes, in my mind, I am the best of the best. No one comes near me in trading. Like, I've mastered this game in my mind. But if I don't make sense to you or what, try other trading channels whereby, like I said, everything on YouTube it has been recycled. It's a duplicate. Me teaching you this, I'm recycling the information that I've learned from 2022. So yeah, hope that the video added value and you managed to grasp a few things here and there. That's the best I could give a hand to, and I wish you all the best. Next video will be on your trading psychology, whereby I'll try to make the video longer so it can get to your thick skull and understand it, that that's the fundamental and most important thing that you need to get right in your trading. And also to survive this role. Where is it? To survive this role right here, what I witnessed is that you need to master this. Also need to master this. Once you master this, guys, depending on your capital, trust me, trust me, you know, slow, not slow, personal accounts or live accounts, your money. I've been pushing it and I survived this rule. But with what's happening currently in the Middle East, it's making things slow for me to grow the account. So the best thing for me to do, or what I chose to do, is now switch to the prop space, whereby there are certain rules, and those rules, I believe, they help you to become a better trader. So the best thing I could do is that, rather than funding small amounts of money, let me get a funded account, pass my phases, and then prove to the firm that I can trade, and then whatever I make, get my profit split share, and be able to buy bigger accounts so I can make good money. You know, that's it from me to you guys. See you in the next video. Ciao.